Okay, we're open. Can you guys hear me? You guys hear me okay? Okay, great. Thanks a lot. Your letters are there.
Thank you. Order partially filled. Order filled.
I'll shorten SMCI for
Order
fun.
cancelled.
Shorting SMCI for funsies. Nose beers. What the fuck is wrong with you? I've never taken drugs in my life. Fucking weirdos here, man. Makes me want to not stream. This is work. I'm at work. What's your problem, Axolotl? I was at work till midnight last night. Were you?
Order filled.
You know, my coworkers love Zyn, but I don't get it. You're welcome. Okay, so let's take a look at most. SMCI coming in pretty hard here. I might cover it a little bit. I shorted a little last night. I'll cover some for a loss. You know, the nice thing about SMCI is it's so volatile. It gives you a chance to win on any, no matter what position you take. Oh, look at DJT below 30. MicroStrategy below 3. Look, it's at 317. Okay, super micro, most volume traded. Intel, Nvidia, Tesla, lithium company, never heard of. Lyft, Big Bear, Plug, Rigetti, you know, kind of falling out of the top 10 there. Not bullish at all. Palantir, Upstart. Upstart had a big quarter, I think. Alibaba, Apple, Micron, SoFi. There's D-Wave. For whatever reason, caught up in the quantum wave. Archer Aviation, another meme stock. Ford, CVS, NIO, Open Door, surprising on the list, but only a $1 stock, so it doesn't really count. Vertiv, Soundhound, Lucid, and Marathon. Okay, let's look at gainers. Not too many gainers today in the dark tape, but actually plenty on this list. So Upstart, Mercury General, which I don't know. Angie is old Angie's list. Confluent, you know, the Kafka makers. We like Confluent over here. Calumet, Pitney Bowes, CVS, Chef's Warehouse, ADEX, old drug company there. Ehang, Spartan Nash, United Fire, Lithia Motors. I should look into that one. Hughes Holding, KE Holdings. That's BEKE. Is a Chinese one, I think. Gilead, huge quarter. Farvaris, Easton Technology, SynAI, which was on this list yesterday. Monarch Casino, Nova, Minerals, Sensata, and Hesai Group. and then something called Euphoria Therapeutics. All right. Losers, SimilarWeb. Ooh, SimilarWeb down 43%. I'm a client of this thing. I didn't even know they were public. I had no clue they were public, actually. Almost $1 billion company. Star Surgical, OneStream, Teradata, Zillow, Bally's, Blackline, Allison Transmission, Conduent. Lyft had a bad quarter. Cornet, Vertiv, Chimera, Silvamo, Studio City, Westinghouse Air, a bunch of companies I don't know. Ginkgo, perennial loser. Smurfit, old packaging company. Nano Dimension, 36KR Holdings. Waters, life sciences company. Eagle Materials and Martin Marietta. Okay, so interesting day. A lot of winners, a lot of losers. By value, Tesla's traded $5 billion so far. Nvidia's moved $3 billion. Supermicro, $1 billion have traded. Berkshire, Microsoft, Apple, Palantir, Meta, all normalized to be trading a lot. Alibaba, Intel, Amazon. Micron down quite a bit. It's traded $400 million of volume today. Upstart, $500-600 million. Alphabet, kind of low volume to be honest. Alphabet's only traded $400 million. It's a $2 trillion company, so really not much liquidity relative to the market cap. Vertiv, MicroStrategy, again up there. Broadcom, CVS, AMD, Alphabet, AMAT, Gilead, Netflix, all normal. Tempest AI, not so normal, up on this list with the most liquid giants. So that's it for what's going on. Quantum catching a small bit here. SMCI fading after a big short squeeze. A lot of short sellers expecting hell there, and turns out hell didn't come through. Just a mild version, maybe purgatory. Yeah, it's enjoyable to trade SMCI because you basically get a 40 cent swing every minute. And, you know, it's very forgiving. So you might have to take a loss, but generally you're going to get out of every trade you do, long or short, with a profit, which is kind of amazing if you think about it. Yeah, Nick, I mean, you know, it's hard to take long-term projections of any company too seriously, especially if they're not filing their SEC filings. Yeah, I just go by quarter. Their 25 guidance was pretty huge drop there, and they might do another huge drop for all we know. Well, I wouldn't look at trailing PE. We write a lot of JavaScript, well, TypeScript. We write a lot of Java. We write a lot of Python. I don't know what SMCI will do. I'm not sure I was ever that bullish on Santa. I sold my stock the day I bought it. I'm kind of bearish on SMCI now. I was bullish. I'm not long VKTX, but I do like the GLP space. And I like that stock. But it's, you know, it's one of these stocks where obviously we've been wrong on it, and some people think there's serious issues with that drug. That's pretty worrisome. We should add it to our endocrinology list, actually. Don't know Coursera that much. The Google stock difference is a voting shares, I believe. I'm mostly focused with respect to trading on just the quantum computing stocks, the big two quantum computing stocks, Rigetti and IonQ. Just deeply short both of those. That's my main focus right now. Yeah, I just have a lot of allergies. There's a lot of people on Twitter talking about it, VKTX, Daniel. So you can go search VKTX on Twitter and you'll see all the people complaining about, not complaining, I mean, some of them are accusing of specific issues. We've basically just been short quantum for a month. It's been very painful. You're on your own, that guy. No, I'm not much of a vol seller. I would rather sell vol than buy it. Yeah, I need some Claritin. I don't think I have any right here. Maybe in my bag. Yeah, Chelsea's Hell's Kitchen's fine. Okay, so I've been working on Amgen for the last day or so. One of my favorite biotech companies I've looked at for decades. I'm a big fan of Anduril. A lot of friends who work there. I don't. It's just not my job to go out and sell premium. That's somebody else's job. It's not a simple job. It's a lot of work. You got to be a vol expert. I'm not a vol expert. I'm a biotech expert. The best APIs for finance, you're going to have to deal with very large companies who will not work with a single person. They're looking for multi-million-dollar contracts. Yeah, Coursera sounds interesting. Yeah, definitely sounds interesting. We could take a look. It's the kind of shit that I like. Is wrap something like this. Yeah, there's a secondary market for Anduril. You kind of have to pay through the nose for it, but I think they're doing a new fundraising as well. There you go, Tom. You know it. You know lyrics. Sing along. Oh boy, Tom. Jail stool? I don't know. I haven't looked at it too closely. Not really looking at too many IPOs. Amgen's probably a buy. I still have more work to do. You know, a lot of times when it comes to like an industry that you just want to follow really closely, a big thing that you're trying to do is not just come up with a stock pick, but also like really understand, you know, that space. Because if it's your job to be a biotech expert or a software expert or a semiconductor expert or whatever, it's actually kind of more important that you know the details and fundamentals of the company than it is that you pick stock. You know, now some of us are trying to just make money, and that's fine. In which case, my approach you should probably shift it a little bit. But my approach is not only just to make money, but also to really be an expert in the space, which is kind of a more amorphous and abstract goal. And I found over the years that, try to serving both goals kind of helps. It certainly helps, to be more thorough. You can't hurt your investing. It's definitely a good thing. But, you don't have to be that thorough to like figure out what the main issues of a stock are. Like a lot of these little drugs for Amgen, they're not going to make much of a difference. They're pretty minor details. But in a world where you want to get hired, or you want to have a lateral kind of career opportunity, it's good to know every detail. Yeah, TA is pretty cringe to me too, but I'd also not knock the way people make money. It's, if that's the way they profit, then who are you to if somebody's profiting trading with astrology, so be it. It's not your business. Let them do it. I was in the office till really late last night, so it's pretty hard to watch the market and also manage the company. Ooh, SMCI 43. Yeah, Matt's exactly right. But the thing is, like, if you know a space really, really well, you don't have to be a good trader to make money. You might try to trade and, you suck at trading, but every damn drug in the whole drug industry. Well, that's valuable. That's really valuable. You can get rich a different way. And maybe you hook up with the guy that really knows how to trade and you're his analyst. That's fine. What's wrong with that? Plenty of money to be made in any which way. Don't be weird, Dennis. Don't be weird. Don't be weird, Mateo. Please. You're being weird. You're probably going to get shot by one of my guys. Sorry. Sorry in advance for your death. Cubicle, sounds like you too. Also want to be shot. Guaranteed returns. I would never short Dasha. Heh. Sounds like you got a desire for shuffling off this mortal coil. Just banning people left and right. Hanging clothes, mooses? Are you lying? Are you making stuff up about me? Why would you do that? Why would you do that? That seems like stupid thing to do. I'm short QC. You ever heard of green screen? Some of you guys just deserve to lose money. How about that? Yeah, we're doing Hong Kong soon. Galaxy gas right next to me. I don't go anywhere without the gas. I am tired. Yes. I'm very tired. Oh, Amgen's investing pretty big in this drug. Rocatinlimab. Diva Lucky. Sounds like you also don't want to be here. Potentially. It's not just about return. It's a lot of things that go into being a good investor. Mike, it sounds like you should probably find another channel too. I don't trade bonds, but I'm going to start just because I want to make sure they're good for Goodell. Patience, 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 patience. No. Patience and ability to change your mind, and ability to have conviction, which is the opposite. You all right, Mateo? Thanks, Milan. I think we got your email. Othmane, we haven't launched publicly yet. We will at some point. You'll see. Yeah, part of being a good trader is your max drawdown. That's the most important thing to an investor. What is your max drawdown? That is the critical question. Another one is, what is your annualized volatility? Don't know anything about the housing market, sorry. You know, medicine takes a lot of work to understand. Probably takes about, a lifetime of studying. But you might know some other field really well. If you don't know any field really well, I would get started. Could be software, could be semiconductors, could be retail, could be restaurants, could be anything. Just pick and study. That's what I would do. No, Lenny, we have not. Bond market's bigger than the stock market. That's where the real neighbors are. Yeah, space has gotten very popular, hasn't it? Don't worry about how I look. Worry about yourself. Did I ask you for your advice? It doesn't come down to knowledge and plenty of MD PhDs on Wall Street. It's more about logic. I mean, there's plenty of people who can, become a researcher. They go through the motions to do it, but they're not necessarily always logical. Human emotions and bias cloud much judgment. People get very addicted to a research hypothesis. Qubits is such a sad, kind of like fraudulent company, aka D-Wave. Crashing out. It's just a volatile stock. That's a good idea, Neo. Do you want to do that for me? Okay, here comes Quantum. If you have a CS degree, I don't know why you'd want to get into pharma. Well, let's stick to CS. But yeah, there's plenty of crossover. Sad day for Rigetti, yeah.
Order filled.
So you don't know what I'm doing, but you're giving me suggestions on how to do it.
Order partially filled. Order filled.
I've had enough of Powell. What's he going to say that's new?
Order filled.
I'm interested in trading bonds because um, I manage a software company that does financial information, and that financial information a big part of that is bonds. So I just want to understand them better and be able to provide the best financial information I can to clients. If you think you could help me with that, send me an email. I can hire you as a consultant, but you'd have to be a bond expert. Or maybe you give me some advice for free. Who knows? We're not looking for too many entry level people. We're only looking for people who live in New York. Not really looking for interns either. Yeah, we're going to try to do that, Natty. William, we're working on debugging it. It's apparently too complex for the browser. It kind of crashes the browser, so we have to
Order filled.
optimize it a little bit. Artem is yeah, of course, I have a network, but a lot of the guys I know don't want to be bothered. So if there's somebody out there that'll get in line with me and be patient and answer my stupid questions, then I use Chrome. We mostly develop for Chromium, but like a good software company, we look at every browser. Well, the first tip I give you is that people like me don't want people who will learn from them. I don't give a shit about what you learn. I want you to work and provide value for me. I'm not trying to provide value for you. I don't care about you. I care about you working for me and making me money. So don't approach somebody and say, I wish I could learn from you, because that's just not, you're not thinking about it correctly. You're supposed to be providing value everywhere you go to work, not, oh, I get to learn. You're going to learn by osmosis, but that's not that's not a that's not a sales pitch. I don't know if D-Wave had news or not, but D-Wave's always a good short. The shareholders of D-Wave are retarded. They really believe that annealing is useful for something, but they also look at the income statement and don't see any revenue. And they can't resolve this paradox. They're just like, I wonder why that's the case. Oh well. Santa Maria, you might want to delete your message before we delete it for you. Yeah, Sean, we purposefully have not marketed the product yet. We're still working on finishing touches. We got a lot. We actually have a lot to do, so it's not just finishing touches. We have a lot to do on options. We have a lot to do on bonds, currencies, commodities, foreign stocks. A lot to do. So when we go out there, I don't think annealing is good for optimization. You could just use classical computing. I've never seen a case where annealing actually beats classical. Because there's classical approximations that are better. I think. Yeah, we don't have a fantastic crypto product yet. Futures are coming very soon. I don't think it's too late to learn the code. Absolutely not. I would learn the code yesterday. You can't execute on Godel. It's not an execution. It's a research tool. At some point, we might do execution. You know, at least piping your API through Godel, and then at some point, you know, God forbid, becoming a broker dealer. You know, I don't want to compete with Robinhood and all those guys, but I've never used Excel Copilot. I use Mac. Bloomberg's not really a market data company. They're really almost everything they do is terminal based. Asian market soon. Mirrored molecules? Do you mean chiral? Yeah, usually when you file patent and there's chirality, you discuss that. I think AI has a really tough problem with compositional thinking. So it might be many years before AI can really do a lot of programming. It can do like 50 to 100 lines of code, maybe even up to 500 lines of code well, but it breaks down pretty quickly after that. There's a quadratic problem there. Nobody's really been able to figure out. I'm sure it'll be figured out someday, but you know, a lot of software engineering is not just tedious plugging and chugging. It's also about architecting systems that make sense. We don't have a tutorial, but if you type help or you ask questions in chat, you should be able to read a little tutorial. I think we do have a tutorial. It's on Notion, but I don't know what the link is. Somebody should be able to paste it in here. Yeah, exactly. Can we ban this Drake fam? I don't know who this is. Weirdos. I'm not your friend. You know, just because I live stream doesn't make you my buddy. You don't know me. I let you into my life a little bit, but that doesn't mean that I care about you or I form like some close bond with you. That's called a parasocial relationship. Stop being weird. I'm just a guy that likes stocks. I'm not Amaranth. I'm not going to try to trick you into thinking that you might become my boyfriend. There's no chance you're going to become my boyfriend. I love Amaranth, man. I simp for her, no problem. Karina Kopf, Amaranth, I'm simping for all y'all. She just might look at my message, and it might be the start of something special. You never know. You know? My friend. Yes, my friend. Simping ain't easy. Yeah, I'd say Amaranth is pretty. Yeah, that's an understatement. I'm a D1 gooner. I'm the top 10 incels in the whole world. She's married, but she might not be married soon. I can swoop in. What the fuck? Phantom shares, let's go.
Killing companies, then building them. What?
He was shocked. He thought the money from stock lending was big. He said Goldman made 75% of its profits on stock lending. In one case, I think it was a Goldman case, they actually had organized the computers that they gave to big hedge fund clients to, when they were doing trades, to mark short trades as longs. This was on the computer. This was a case. Nobody went to jail. They paid a few $1 million. They've been making multiple millions off this crooked stuff, and they get charged a few $1,000,000. It's the cost of doing business. They need to go to jail. I'm waiting
Cry more.
for the head of the Justice Department to decide that this kind of fraud is jail.
You're telling me marking it short or long, the trade's gonna clear either way. Doesn't fucking matter. There's no fucking lack of shares that people will lend out. You're upset because you want to stop me from selling your fucking stock. Get out of here.
Worthy. They should be thrown to jail. People go to jail for stealing some thousands of dollars. These companies steal millions of dollars.
Well, the problem is this is so large, it's gotten to be so big.
An economy and everybody can have a life. And so to get to the bottom of it all, to see what they're all doing, what the cabal is doing to us, and how we can fight back. I'm Joe Springer. I was the #1 ranked stock analyst in the world when I was a stock analyst. Now I'm here with you because that financial media, as we will see, lies to us. It's controlled by the hedge funds and the special interests, and they don't have our best interest in mind, but that's okay because we have each other. We have Multi-Baggers Club, and we're going to do a way better job than those bozos in the financial media ever could anyway. Even if they weren't lying to us, Jim Cramer just called those guys bozos, didn't he? So let's dive in and see this thing. Let's do this thing. So why do markets exist? Why do the capital markets exist?
Good question.
Well, the biggest reason they exist is so companies can raise money. So they can raise money. I want to build a plant so I can employ people and make products and services that people need so we can have an economy and everybody can have a life. And so we need the capital markets, and companies that need money need the capital markets. And so they put their stock out there. So for example, a biotech company with a life-saving drug doesn't have revenues. How does it get money? The capital markets. So that's what the beauty of the capital markets. That's why they're so important. And we're going to see that the management class of criminals has been stealing our livelihood, all of our money, $100 trillion worth, and our life-saving drugs. Let's see this phantom share awfulness and the scope of it. We saw Wes Christian and Lucy Commissar. Wes Christian is the...
I think psychologically this is just an accountability problem. You know, everyone wants to be rich. Buying the wrong stocks makes you feel like maybe, you know, you've been cheated somehow. And if you've been cheated, you know, because you picked the wrong stock, you want to blame somebody else. Obviously, the person to blame is yourself. You picked it, you bought it, but there's no way you could be wrong, right? It's funny, even Matt Nachtrab, you know, who mentioned the other day, he's like, oh yeah, Shkreli was right, but not for the right reasons. I'm like, so you think my 40-page report was right by accident? I missed it. I missed something. You just gotta admit, you know, you should never have been involved in biotech in the first place. Well, usually being right is making money. That's sort of a stupid saying. It took a very long time, Dusty. Now, very few companies threaten me on the short seller side. that, Hindenburg? You're only right if your trade makes money. So it's just a tautological nonsense. Semantic tricks that mean nothing. I'd rather run a company than trade it. Deficit reduction might reduce growth. Eventually, it's positive for GDP. Day trading advice: make your position smaller. Biggest mistake everyone makes. Position's too big. Yeah, I heard orange pulp treats NASH. It's very good for your liver. Some people will get that joke. I don't know Upstart too well. Yeah. You can always be better at investing, you know. I look at the way I used to invest and laugh. I really thought I knew what the fuck I was doing, and under no circumstance did I actually knew what I was doing. Yeah. 827's right. Emma? Yeah. I don't know how I feel about Emma. Was she a good boss? She hasn't done a good job at Glaxo. GlaxoSmithKline. Trying to look at this one stock. You guys are throwing hundreds of stocks at me. I'm not Jim Cramer.
It's funny, they approved this thing without a control arm. Hey, Rigetti's back up. I think it's important to study academic finance. Cannot hurt. Keeps you a little grounded. May not be that translational to reality, but yeah, Rigetti will probably go bankrupt someday. I don't know what year specifically. Usually it takes a little longer than you think. This could be a big drug if it works. I don't think the specific year matters in terms of like this year versus last year. There's no like reset on January 1st mentally. My favorite drug is probably Rituxan. It's kind of a really cool drug. It's a real sea change in medicine when that came out. Maybe Herceptin as well. You know, Hemlibra is pretty cool the way it works. There's so many great drugs. I love them all. Every drug is a little miracle. A little miracle of science. The idea that we could design these substances atom by atom and they actually would do something that helps you is incredible. You think about it. Michael, I think it's time for you to go. I appreciate you coming down here. You know, unfortunately, you know, your presence is a net negative to our community. So I
I'm unfortunately asking you to leave. And it's not optional. You're done. Fadeaways, unfortunately, your presence, although appreciated, has become something of a distraction. And I have to say that you are no longer welcome here. Fadeaways. No F. No fadeaways. The F is for you. You think it's for somebody else. The F is for you, my friend. This guy's writing F about himself. Paying respects to himself. Doesn't work that way. Incroyable. My favorite French word. Incroyable. Sierra chart? No, what's that? Stolen chicken. Any good? Don't read into viruses. Don't read into like little market moves that much. Keep the big picture. I don't think RFK is going to do anything. What the hell is he going to do? Nobody respects the guy. Really interesting. Sierra charts. I think I vaguely remember these guys. Let's see. This old HTML5 website here, but you know, maybe the actual system's pretty good. It also looks like an old system. Cool. I'll check it out. It's definitely interesting. Yeah, any tools that you guys want us to make in Godel, just tell us, and I'd be more than happy to do it. We have a long list that we're working on, but you know, if you want something and some other tool that you've been using and you want it in Godel, I'm happy to do it. Yeah, so that's a good question, Robert. We spent a lot of time on that. I think we're going to use TradingView's charting library, but in the long run, a big part of our company is going to be data visualization. So like ultimately we have to be able to do, you know, serious data viz. So D3 is obviously, you know, a good choice there. Yeah, Albert, we got something like that cooking. Yeah. Both IonQ and Rigetti have a nice little bounce. Yeah, we definitely have broker integration coming. I don't know what you mean by meme stocks auto watch list. Do you want like just a pre-populated watch list of memes? Yes, we can do that, Michael. We have News 2.0 just about to roll out, but that could go into 3.0. Yeah, it's hilarious. The Rigetti baggies are, they don't realize there's like 8 other companies ahead of Rigetti. They're not really taking that seriously in the quantum community. It's just bizarre. Just like make a few phone calls, go on a few message boards, like go do a little work. Yeah, you don't have to pay to use Godel necessarily. Jack, Bloomberg has a whole Bloomberg University. So Autodesk has, if you want to use Autodesk software, there's a 1,000-page book. So if you, powerful software requires, quite a bit of learning curve. That's why Bloomberg is so expensive and people love it. It doesn't take long to learn either. You got to invest a little bit of time. Like imagine looking at some complex molecular docking software and like it should be intuitive. It's not intuitive because it's a difficult thing. Nah, the navigation is the good part about Bloomberg. That's the whole point. It's like, how many menus would you need to look at everything in the stock and bond market? How many clickable GUIs do you need? I mean, it's just too much. That's why the command line works. It's the same thing with PowerShell or Linux. Yeah, you boost your productivity like 50% plus We're not going for GUI customers. Learn the terminal or not, or use Yahoo Finance. Yeah, for sure. Was oh yeah, we're definitely gonna have Brazil.
I don't know when the app's going to come out. It might be a while.
I know people want a desktop app. Did Vlad work in CGI? I don't think so. No, not yet. Honestly, we wouldn't mind changing the Godel name. It's not a fantastic name. Yeah, we'll do business in Asia. Grid snapping coming, don't worry. It's our company's called DL Software, so Go DL. It's Godel. I just like math. Well, that's the whole idea of the focus, Daniel. But yeah, we're always going to be improving the UI a little bit. Our company's valuation is something we talk to our investors about, not random internet people. We don't use Go. Ooh, I like that Galaxy terminal. And then if you type gas, enter, a little like little effect comes on. Gas comes out. I wrote Godel V1. I helped on Godel V2, but for V3, most of the code is written by other people. I do product stuff. The Anavis drug is worthless. Not a lot of Canadian stocks because there's just not many biotech stocks in Canada. We dedicate this software to Harambe, whose sacrifice touched all of our lives. Harambe. Good luck, Jason. Just tell them about how hard you're going to work. They like that. And talk about how you're going to help the clients. Big data. Thousands of chickens. Quack, quack, quack. Product is good. It gets no respect, but, you know, commodity product. It might be positive or negative depending on how you look at it. I like that ladder attack indicator. Ladder attack in progress. Brace yourselves. I haven't looked at the Swedish biotech stocks in a while. I'd like to. Just so busy. We could do a stock Twitch feed. Anovis is worthless. ANVS? Sorry, man. You've been scammed. They're scamming the sheepy. Waterwoo. Damn, they're already doing a biosimilar to Ocrevus. That's wild. ABP 692, ocrelizumab, multiple sclerosis. That's a CD20 from Roche. Wild. Amgen biosimilar is going to make a fortune. Why would it look good, dude? Do you know anything about biotech? It's a fake company, man. Yeah, I like Adma still. There's some pure play biosimilars. You gotta look around a little harder. Yeah, man. A lot of scams out there. Jeep Heide. Let's turn to 93 in income. Okay. Taxes 155 plus 345. Taxes. $85. Okay. Looks good. That was a lot of work. Jesus. Doing too much. I love that saying, Aries. I don't necessarily agree with you, but yeah, I love that saying. He doing too much. It's a very black, urban saying. Y'all doing too much. Amgen's pipeline's kind of stinky. But Keytruda biosimilar looks pretty fire. I mean, it's not gonna add that much. I mean, how much could it sell? It's gonna be a lot of biosimilars. Between that and Opdivo and Ocrevus, it's not bad. But the pipeline's a little shitty other than their GLP. Yeah, I'm friends with Amjad. He's the man. He used to watch these streams when he was building Replit. Now he's got a $1 billion company. I love that. I love that. I do both. I do both, Sorenman. Amjad's gonna have a tough next 5 years. I don't know what the hell they're gonna do. Well, they'll be fine, I guess. The biosimilars help a lot. They really need one of these other drugs to come through. I don't think rocatinlimab is going to sell that well. I don't think any of these other drugs have very high risk of not working. One or two of them will probably work. So what do you got? 311, stocks at 290. Does it look like I'm watching the JPOW meeting? We watched that shit yesterday. I lost brain cells. Just advertisements for freaking senators who just mouth off, hoping that the media might pick up one of their comments and then posting it to freaking X and Instagram as fast as they can. These guys are pathetic. It's over, Cooper. It's over. It's so over. You know, a lot of people underestimate these professors will make deals with you. Yeah, you want to get good sleep at night. I mean, you don't want to be up all day. I mean, all night. My dad worked at night. I don't recommend it. I don't take any sleep aids, no, thank God. Amgen's okay long. Not too bad. How's my mouse? My mouse disappeared. Gotta charge it, I guess. This is kind of retarded. Where did my mouse go? Why do I have a wireless mouse anyway? It's fucking stupid. Can someone ban this guy irreverent? Yeah, I like to look at S&P Global. So, or customer. All right, let's look at S&P Global. Huge company, 200 billion market cap, arguably the biggest sort of financial information company in existence, bigger than Bloomberg. Oh, nice 10Q just came out. Okay, 161 billion market cap. It's not exactly that. So probably roughly the size of Bloomberg, maybe a little bit bigger. Credit ratings, benchmarks, analytics, workflow in capital, commodity, and automotive markets. Asset managers, investment banks, commercial banks, insurance companies, exchanges, trading firms, and issuers. Commodity producers, consumers, traders, intermediaries. And automotive markets, including manufacturers, suppliers, dealerships, service shops, and customers. Incorporated in 1925. Standard & Poor's.
the option to link a quote monitor to the chart. Yes, we are working on that. Okay, so there's market intelligence, ratings, commodity, mobility, and indices. They sold S&P Engineering. Interesting. Asia's 58% of data, but oh, okay, 58% of people are in Asia. Got it. Interesting. Wonder why. Cold as hell in here. Villain Arc 2 is coming, don't worry. I got a bunch of villainous shit planned. Well, somebody asked me to look at S&P Global, so I'm looking at S&P Global. And I'm very interested in this company as well. I'm not in the biotech field anymore, really. Yeah, BBAI is taking mind share away from the quantum baggies. Are very excited and interested in the BBAI and SMCI. Jesus Christ. Shenmuka, do you even understand what I'm doing? You know, I run a software company, right? Like, all my friends work at OpenAI. The CEO of S&P Global is 49? Wow. And a woman? Her name is Martina? Sick.
Oh, they bought. Oh, yeah. This was a huge deal for them. 2/28/2022 merged with IHS Market. That was huge. This is ruining my life. Dude. BBAI is definitely a short. I can't say I'm like an expert at the company though, so maybe I'll take that word definitely back. No, nobody in AI uses AMD. Okay, so US is most of revenue. 60%-ish. Gotta make this phone call. It's very annoying. Oh, I know how I can do this. Oh, why can't I log into my damn... Fuck. a second, boys and girls. Fucking hate Team Viewer. What the fuck? TeamViewer really wants you to pay them. Yeah, Google Remote Desktop? I don't know that one. Mark Cuban's new album. The fuck? Just trying to remote into a desktop, it's so fucking painful. Farcoin below 50 cents. Economic data moves Forex. Rates, specifically. Interesting. Did I miss the revenue here? I was in jail during the GME squeeze. We were going to ban this guy A, B, C, D, E, F, G. Yeah, you get bad luck sometimes. You gotta deal with it. FTF. I had pretty good access, all things considered. Yeah. I haven't checked in with SBF. I'm not really supposed to either, so I'll leave that one alone. But I haven't heard anything either. Yeah, I heard about the Destiny thing. I mean, honestly, it kind of sounds like whatever. Got some MicroStrategy bears in here. Yeah, I guess they're not going to go quietly into that good night.
Yeah, the thing about S&P Global is they have this amazing moat around ratings.
huge mode around ratings and indices. You know, S&P 500 isn't going anywhere, and debt ratings are really just like an oligopoly. So pretty solid business, and obviously they tack on different businesses as they go on. Who wants to read this extremely advanced book? Springer Finance, a course on derivative securities. I've never read it, so I don't know what. Getty's back up to 12. It almost ticked down below. It's hanging in there.
Order filled. Order partially filled. Order filled. Order partially filled. Order filled. Order filled. Order partially 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 filled. Order filled.
I never heard of this XLO. Zilio Therapeutics.
Order partially filled. Order filled. Order partially filled. Order filled. Order filled. Order filled.
A lot of investors are interested in these Chinese stocks. I mean, they do look cheap.
Order filled. Order cancelled.
All right, you guys want to read this one? Carry Back, A Course in Derivative Securities, Introduction to Theory and Computation. Springer. Okay. The editorial board here for Springer Finance. Might want to check out Springer Finance in the meantime. Got a pretty good series here
hundreds of books about markets. Pretty academic style. Not too many books. It's like a fairly, maybe 50 books total they've put out. Yeah, it's named after Joe Springer. It's true. Ay, ay, ay. Yeah, I kind of like IVVD. Ideally closer to $1. Okay, here's the list of books. Let's see if any are interesting. Credit risk valuation. This book, Financial Markets Theory, Equilibrium, Efficiency and Information. Another credit risk book. Risk neutral valuation, pricing derivatives, interest rate models, uncertainty vol models, financial markets in continuous time, visual explorations in finance, math of financial markets, the Becquelier Congress, or Becquelier, credit risk and banking, more models, irrational exuberance reconsidered, stochastic calculus, risk and asset allocation, efficient methods of valuing interest rate derivatives, convergence, credit risk, stochastic calculus again, exponential functionals of Brownian motion, interest rate management, derivatives. Oh, is that churn? No, that's not the right churn, is it? Could it be? Ziegler, I thought the other churn Simons died. Game theory analysis of options. Okay. The Texas A&M professor. This book is an outgrowth of notes compiled by the author while teaching courses for undergraduate and master's students at WashU. A course in options and futures was considered an advanced elective, but now it's mandatory for any finance major and is an elective chosen by many non-finance majors. I wonder why. Moreover, students are exposed to derivatives in different courses. This expansion of education in derivatives mirrors the importance of derivatives in industry. MBAs focus on derivatives for hedging and speculating. That's sufficient. However, the seller of derivatives, in addition to needing to understand the buy side, is confronted with the need to price and hedge. The buyer, depending on the degree of competition, may likely benefit from some pricing knowledge as well. Pricing and hedging is the primary focus of the book. Therefore, learning the fundamentals of pricing and hedging, students also acquire a deeper understanding of contracts themselves. Hopefully this book will be of use to practitioners. The book is concerned with pricing and hedging derivatives in frictionless markets, so the book ignores transaction costs like commissions, bid-ask spreads, and the price impact of trades. It ignores margin and short selling restrictions. The theory of pricing and hedging in frictionless markets stems from Black-Scholes, Merton, and is a very well-developed theory. It is based on the assumption that there are no arbitrage opportunities in the market. The theory is the foundation for pricing in markets with frictions, but practice may differ from theory in important ways if the frictions are significant. For example, an arb opportunity in a frictionless market often will not be an arb opportunity for a trader who moves the market when he trades, faces collateral environments, etc., collateral requirements, etc. The book has nothing to say about how one should deviate from the benchmark frictionless theory when frictions are important. Another important omission from the book is jump processes. The book deals exclusively with binomial and Brownian motion models. The book is intended primarily to be used for advanced courses in derivative securities. It's self-contained. The first chapter presents the basic financial concepts. However, a lot of the material
that is standard in an introductory book has not been included here. On the other hand, though it is not an introductory book, it is not a truly advanced book either. On the topics covered in the book, there are more advanced treatments available in book form already. However, most of those books are too narrow in focus for the courses I taught, or not easily accessible to students, or both. This book is a bridge for an introductory course and an advanced course. Towards that end, I've included citations to more books in appropriate places. This book is an introduction to computational methods, and the term introduction is meant quite seriously here. This book is for students with no experience in programming or numerical analysis, and it covers only the most basic ideas. Nevertheless, it is an extremely important feature of the book. It is my experience that the theory becomes much more accessible to students when they code or simulate a process. This book builds up binomial, Monte Carlo, and finite difference methods by first developing simple programs for simple computations. These serve two roles. They introduce the student to programming, and they result in tools that enable students to solve real problems, allowing the inclusion of exercises of a practical nature rather than just theoretical. It's a semester-long book. Nearly all the examples are derived from first principles, and they're in Excel VBA. They're downloadable free of charge on carryback.net. That's the author's name. They use a few special features of Excel, in particular the cumulative normal distribution and the random number generator. Otherwise, the programs are easily translated into any language, like MATLAB. I chose VBA because most people use Excel. Viewed as a math book, this is a book in applied math, not math proper. We're trying to get people up to speed, so different math issues like filtrations, formal definitions are ignored. So it would not be unfair to say this is a cookbook. We don't get proofs. Trying to be as simple as possible. We use exclusively the probabilistic martingale approach, both because it's my preference and because it seems easier than partial differential equations for students in business and the social sciences to grasp. Okay, we might need a different book. Sampling of some of the more or less distinctive characteristics of this book are important theoretical results are highlighted in boxes. The derivations that are less important are in smaller type. Changes of numeraire are introduced in the first chapter in a one-period binomial model. The probability measure corresponding to the underlying as numeraire being given as much emphasis as the risk-neutral measure. The fundamental result for pricing, as prices or martingales under changes of numeraire, is presented in the first chapter because it does not need the machinery of stochastic calculus. The basic ideas in pricing digital and shared digitals, and hence in deriving the Black-Scholes formula, are also presented in the first chapter. Digitals and shared digitals are priced in chapter 3 before puts and calls. Brownian motion is introduced. We'll talk about that. And Ito's formula, the distribution of the underlying under different numeraires is derived directly from the fundamental pricing result in Ito's formula, bypassing Girsanov's theorem, which is a consequence of Ito's formula. Substantial emphasis is placed on forwards, synthetic forwards, options on forwards, and hedging with forwards because there are many applications in fixed income and elsewhere. A simple example is valuing a European option on a stock paying a known cash dividend as a European option on a synthetic forward with the same maturity. Following this author, the formula for exchange options is derived by a change of numeraire from the Black-Scholes formula. Very simple arguments derive Black's formula from forward and futures options from Margrabe's formula, or Margrabe's formula, and Merton's formula for stock options in the absence of a constant risk-free rate from Black's formula. The demonstration of equivalence of these important models or formulas are as follows. Black-Scholes is equivalent to Black, Merton, Black-Scholes, and Margrabe's. Quanto forwards and options are priced by first finding the portfolio that replicates the value of the foreign security translated at a fixed exchange rate, and then viewing quanto forwards and options as standard forwards and options on the replicating portfolio. The market model is represented as an introduction to pricing fixed income derivatives. Forward rates are shown to be martingales under the forward measure by virtue of there being forward prices of portfolios that pay spot rates. In order to illustrate how term structure models are used to price fixed income derivatives, the Vassiak-Hull-White model is worked out in great detail. Other important term structure models are discussed much more briefly. Of course, none of these items are original, but in conjunction with computational tools, they make the rocket science of derivatives more accessible. We got 3 parts: introduction to options pricing, advanced option pricing, and fixed income. Most of the chapters build on each other. You have a couple of options on how to alter those, and that's it. O'Kerry is, I guess, male, I'm pretty sure. Right, let me see. I want to make some of my own derivatives trades. Let's see here. It's funny, all this insurance I bought yesterday is actually going down in price, so sort of funny how that works. Even though the price of the underlier is up a lot, some of the insurance I bought is actually down because of time value decay. Not all of it, though.
Order partially filled. Order filled. Order partially filled. Order filled. Order partially filled. Order filled.
Okay, it's a course in derivatives. Introduction to option pricing, asset pricing basics, fundamental concepts, state prices in a one-period binomial model, probabilities and numerators, asset prices with continuum of states, introduction to option pricing in incomplete markets example. Chapter 2 is continuous time models, simulating Brownian motion, quadratic variation, Ito's processes, Ito's formula, multiple Ito's processes, example of Ito's formula, reinvesting dividends, GBM, numerators and probabilities, tail probabilities of GBMs, and volatilities. Chapter 3 is Black-Scholes, digital options, shared digitals, puts and calls, Greeks, delta hedging, gamma hedging, implied vol, term structure of vol, smiles and smirks, calculations in VBA. Chapter 4 is estimating and modeling volatility, statistics review, estimating a constant volatility mean, estimating a changing volatility, Garch models, stochastic volatility models, smiles and smirks again, hedging and market completeness. Introduction to Monte Carlo and binomial models, introduction to MC, introduction to binomial models for American options, binomial parameters, binomial Greeks, Monte Carlo Greeks 1, difference ratios, number 2, pathwise estimates, calculations in VBA. Part 2, chapter 6 is the first, part 2, advanced option pricing, and the chapter is on foreign exchange. So we talk about currency options, options on foreign assets struck in foreign and struck in domestic currency, currency forwards and futures, quantos, replicating quantos, quanto forwards, quanto options, return swaps, uncovered interest parity. Chapter 7 is on forwards, futures, and exchange options. We're going to go through Margrave's formula, Black's, Merton's formulas, deferred exchange options, some calculations in VBA, Greeks and hedging, the relation of future prices to forward prices, future options, time-varying vol, hedging with forwards and futures, and market completeness. Then we'll talk about exotic options. So forward start options, compound options, American calls with discrete dividends, choosers, options on the max or min, barrier options, lookbacks, basket and spread options, Asian options, and we'll do some calculations. On chapter 9, more on Monte Carlo and binomial valuation, Monte Carlo models for path-dependent options, binomial valuation of basket and spread options, Monte Carlo valuation of basket and spread options, antithetic variates in Monte Carlo, control variates in Monte Carlo, accelerated binomial convergence, and more calculations. Now we'll talk about finite difference methods, fundamental partials, discretizing the partial, explicit and implicit models, Crank-Nicholson, European options, American options, barrier options, and we'll do some calculations. Chapter 3 is fixed income concepts, the yield curve, LIBOR, swaps, yield to maturity, duration, and convexity, principal components, hedging principal components. Chapter 12, introduction to fixed income derivatives, caps and floors, forward rates, portfolios that pay spot rates, market model for caps and floors, the market model for European swaptions, a comment on consistency, caplets as puts on discount bonds, swaptions as options on coupon bonds, and we'll calculate. Valuing derivatives in the extended Vazikech model. The short rate and discount bond prices, the Vazikech model. Estimating the Vazikech model. Hedging in the Vazikech model. Extensions of the Vazikech model. Fitting discount bond prices and forward rates. Discount bond options, caps and floors. Coupon bond options and swaptions. Captions and floortions. Yield and yield volatility. The general Hull-White model, and we'll do some work. Okay, chapter 14, a brief survey of term structure models. Ho-Lee, Black-Derman-Toy, Black-Karasinski, Cox-Ingersoll-Ross, Longstaff-Schwartz, Heath-Jarrow-Morton, and more market models. The appendices are about programming in VBA. You got the VBA editor, subroutines and functions, message box, input box, writing and reading from cells, variables and assignments, math operations, random numbers, for loops, while loops, if-else statements, variable declarations, passing arrays, and debugging. And then there's a miscellaneous facts about continuous time models. So Gersonov's theorem, the minimum of a GBM, Bessel squared processes, and the CIR model. Great. Let's go into part one. Rest in peace, LIBOR, indeed. It's your introduction of option pricing. What are asset pricing basics? Okay. This chapter introduces the change of numeraire, or martingale method, for valuing derivative securities. Okay, just give me 1 second here. Okay. This method is introduced in a binomial model and then extended to more general continuous states models. Computations in the more general model require the continuous time mathematics that will be presented in Chapter 2. We will begin with a brief description of the basic derivatives, calls and puts, and some other financial concepts. More detailed descriptions can be found in any of the introduction books on derivatives, 37 and 49. Maybe we should look at those. It should be noted that the pricing and hedging results in this book are not tied to any currency. For specificity and a consequence of our habit, we'll generally use dollars. Fundamental concepts, great. Longs, shorts, and margins. In financial markets, the owner of an asset is said to be long the asset. You are long Bitcoin. You are long Rigetti. If person A owes something to person B, the debt is an asset to person B, but a liability to person A. One also says that person A is short the asset. For example, if someone borrows money and invests the money in stocks, then the individual is short cash and long stocks. One must invest some of one's own money when borrowing money to buy stocks. For example, an individual could invest $600, borrow $400, and buy $1,000 of stock. The $600 is called the margin posted by the investor, and buying stocks in this way is called buying on margin. The investor or the portfolio is said to be levered because buying $1,000 of stocks with only a $600 investment amplifies the risk and return per dollar of investment. On a percentage basis, we would say that the account has 60% margin, the 60% being the ratio of equity, which is assets minus liabilities, which is $1,000 of stock minus $400 in debt, to the assets, which is $1,000 of stock. If the value of the stock drops sufficiently far, then it may become doubtful as to whether the investor can repay the $400. In this case, the investor must either sell the stock or invest more of his own funds. He receives a margin call. In other words, in actual markets, there are margin requirements that specify a minimum percentage margin an investor must have initially when borrowing the money and a minimum percentage that the investor must maintain. Rather than borrowing the money to buy stocks, an investor can do the opposite. He can borrow stocks to buy money. In this case, buying money means selling the borrowed stock for cash. Such an investor will be short stocks and long cash. This is called short selling, or more briefly, shorting stocks. For example, suppose individual A buys 100 shares of stock, borrows, not buys, borrows 100 shares of stock from individual B and then sells them to individual C. Both B and C are long 100 shares and A is short. So the net long position is 200 minus 100. 2 times 100 minus 100, which is the original 100 shares that B was long. A short seller of stocks must pay to the lender of the stocks any dividends. In this example, both B and C own 100 shares and they expect to receive the dividends. The company will only pay dividends to C, and A must pay the dividends to B. Of course, investors always wish to buy low and sell high. The usual method is to buy stocks and hope they rise. An investor who shorts or who short sells also wishes to buy low and sell high, but reverses the order. He sells first and then hopes the stock will fall. The risk is that stocks will instead rise, which will increase the value of his liability, his short stock position, without increasing the value of his assets, which is a long cash position, thus putting him, quote unquote, underwater. To shield the lender of the stocks from this risk, a short seller must also invest some of his own funds, and this amount is again called the investor's margin. For example, an investor might invest $600 and borrow and sell $1,000 of stock. In this case, the investor will be long $1,600 of cash, and he's short $1,000 worth of stock. So the equity is $600, and the percentage is calculated the same way, which is 60%. Again, there are typically both initial and maintenance margin requirements. An additional feature of short selling for small individual investors is that they typically will not earn interest on the proceeds of the short sale, the $1,000 of cash obtained from selling the stock. In this book, we will assume that there is a single risk-free rate at which one can both borrow and lend. Moreover, we will assume that investors earn this rate on margin deposits, including the proceeds of short sales, and including any margin that may be required when buying and selling forward and future contracts. Thus, investors gain from buying on margin if the asset return is sure to exceed the risk-free rate, and they gain from short selling if the return on the asset is sure to be below the risk-free rate. These assumptions are not reasonable for small investors, but they're fairly reasonable for institutions. We'll assume that no asset has a return that is certain to be above the risk-free rate, nor certain to be below the risk-free rate, because institutional investors would arbitrage those returns. All right, let's pause there for a second and catch our breath, and look at some securities. The corner of my eye. Whew. Well, Biden coin is down a lot. Joe Biden. Trump coin is worth 15 billion. So, which one do you want? Okay, calls and puts. Call and put options are the basic derivative securities and the building blocks of many others. A derivative security is a security the value of which depends on another security. A call option is the right to buy an asset at a pre-specified price. The pre-specified price is called the exercise price, the strike price, or simply the strike. We will often call the asset a stock, but there are options on many other types of assets also, and everything we say will be applicable to those as well. One caveat is that by asset, we mean something that can be stored. Thus, for example, electricity is practically speaking not an asset. The asset to which the call option pertains is called the underlying asset, or more briefly, the underlying. If the market value of the asset exceeds the exercise price, then we may say that the call option is in the money, or ITM if you see that abbreviation, that's what it means. Buying a call option is a way to bet on the upside of the underlying asset. Some of you guys are being weird. I would encourage you not to be weird if you want to participate in this chat. A put option is the right to sell an asset at a pre-specified price, exercise or strike. Buying a put is a way to bet on the asset becoming low, or the asset price becoming low, similar to shorting. A put option is in the money if the exercise price exceeds the value of the asset. Both puts and calls are potentially valuable,
and hence the buyer of a put or call must pay the seller. A long put option provides insurance to someone who is long the underlying asset because it guarantees that the asset can always be sold at the strike price of the put. Of course, it can also be sold at the market price if that price is higher than the strike of the put. Symmetrically, a long call option provides insurance to someone who is short the underlying asset. The terminology in option markets reflects the parallels between options and insurance contracts. In particular, the seller of an option is said to write the option, and the compensation price he receives from the buyer is called the option premium, just as an insurance company writes insurance contracts in exchange for premium income. Calculating the price at which one would be or should be willing to trade an option is the main topic of this book. Nancy Pelosi is not something we discuss here. It is important to recognize the different situations of someone who is short a call option and someone who is long a put. They're different. Both positions are bets on the downside of an asset, but both the investor who is short a call and the investor who is long a put may eventually sell the underlying asset and receive the exchange price in exchange, or the exercise price in exchange. However, the investor who's long a put has an option to sell the asset at the exercise price, and the investor who is short a call has an obligation to sell the asset at the exercise price should the counterparty choose to exercise the call. Thus, the investor who is long a put will be selling at the exercise price when it is profitable to do so, whereas the investor who is short a call will be selling at the exercise price when it is unprofitable. The buyer of a put must pay the premium to the seller. He then profits if the asset price is low, with the maximum possible profit being quite large. The maximum value is attained when the market value of the underlying asset reaches zero. In contrast, the seller of a call receives premium income, and the premium is his maximum possible profit, whereas his potential losses are unbounded. Thus, these are very different positions. Individuals who sell calls usually sell out-of-the-money covered calls. Covered calls means that they own the underlying asset and can therefore deliver the underlying if the call is exercised without incurring any further expense. They experience only an opportunity cost in delivering it for less than the market price. In contrast, one who sells a call without owning the underlying is said to sell a naked call. The seller of a naked call, or the seller of a put, must post margin, just like a short seller of a stock, in order to ensure that he can meet his obligation. However, this does not apply to sellers of covered calls. A call being out of the money implies that the price of the underlying must rise before the call would be exercised against the seller. Thus, the seller of an out-of-the-money covered call still has some potential for profit from the underlying. In addition, of course, the seller receives the premium income from the call. Institutions often follow this strategy also, using the premium income to enhance their return from the underlying. One can hedge a short call without owning a full share of the underlying asset, if one is able to rebalance the hedge over time. Calculating such hedges is another principal topic of this book. In a certain sense, option markets are zero-sum games. The profit earned by one counterparty to an option transaction is a loss suffered by another. However, options can allow for an increase in the welfare of all investors by improving the allocation of risk. A producer who must purchase a certain input may buy a call option, giving him the right to buy the fixed input at a fixed price. This caps his expense. The seller of the call now bears the risk that the input price will be high. In this case, the option will be exercised and he'll be forced to sell at a price below the stock market price or the market price. It may be that the seller is in a better position to bear the risk. For example, he may have less risk of the portfolio, less of the risk in his portfolio. And the options transaction may thereby improve the allocation of his risks the allocation of risks across all investors. The similarity to insurance should be apparent. Quite complex bets or hedges can be created by combining options. For example, being long a call and a put with the same strike price is called a straddle. Such a portfolio is almost always in the money. It is in fact a bet on vol. A big move in the underlying asset price away from the exercise price will lead either to the call or the put having a high value. Another important example of an option portfolio is a collar. A collar consists of a long put and a short call, or a short call and a long put, with the options having the same maturity. As mentioned before, a long put provides insurance to somebody who is long the underlying asset. Selling a call provides income premium that can be used to offset the cost of the put. The most popular type of collar is a zero-cost collar, a collar in which the premium of the call is equal to the premium of the put. The cost of selling a call for an owner of the underlying is that it sells off the upside of the underlying asset. If the value of the asset exceeds the strike price of the call, then the call will be exercised and the underlying asset must be delivered for the strike price rather than the higher market price. Thus, one can purchase the downside insurance provided by a long put by selling part of the potential upside of the asset rather than paying the cost of the insurance out of pocket. There are many other options, examples of options portfolios that can be given. Let me just take a break here. I don't know BNX. Don't know what it is. Sorry. No, I mean there's tons of applications of straddles. You can sell straddles or buy straddles. You have to look at the vol price. You want to let's look at an actual example, okay? Let's look at the IonQ equity Oman on your terminal. Okay, these are the calls and puts for the stock. The stock's at 39, as you can see. So what I'm going to do is I'm going to go to 39s, okay? And the last sale is $1.39 and $1.40. Let me just check my, yeah, that's right. Looking at my other screens, those are the correct prices. So the straddle here costs $1.40 plus $1.40. So that's what, $2.80 or $2.79, right? So, hold on a moment. Okay, so if I wanted to put this in an Excel, I would say the following. Straddle premium is 280. Underlier is 39. Okay, so if the stock doesn't move at all and it closes at 39, well, the 39 calls, which cost me $1.39, are worthless. They're worth nothing. And the 39 calls, or puts, which also cost me $1.39 or $1.40, and the stock stays at 39, they're worthless too. So a really nice thing to sell this expensive straddle. But I don't know if the stock's going to stay at 39. This is a really volatile stock. But we could say the straddle costs 7%. So you can go long the straddle, or you can go short the straddle. If you think there's going to be a lot of volatility, you might want to go long the straddle. For example, there's only a few days left until this straddle expires. But let's say the stock goes up 8%, okay? So let's pretend that happens, or say 9%, okay? So if the stock goes up 9%, it goes to 42.51. The stock has been at 42.51 before, so maybe it'll happen again, I don't know. But will it happen by Friday? Well, in this case, the 39 call is just this minus 39, right? And that's worth 351. The 39 put is worthless because no one would want to sell the stock at 39 because it's a 42.5.
So you have the right to buy the stock at 39. Well, the stock's at 42.5. That's a pretty nice right to have. And that right is worth exactly $3.51. The problem is you sold the straddle for 280. And now it's worth 351. So you lost 71 cents on your investment of 280. So you have 209 after putting down 280. You lost 25%. That's a huge move for a few days. Now, if you sold the straddle well, you could have collected, like I said, 100% is your maximum gain because you sold it for 280 and you didn't owe anything at the end. Let's say an intermediate situation. Stock goes up 3%. Well, again, the put is worthless and the call is only worth $1.17. So you made $1.63. You made a nice profit here. You made 58% on your money in a few days. So the stock can still go up. It just has to go up or down less than the straddle amount that you paid. So imagine if the straddle premium is 20 bucks. Well, this is really easy. The stock's not going to go up or down 20 bucks in the next 3 days. That would be a great straddle to sell. Or how about if the straddle was 1 cent or 2 cents? Well, I'd buy that straddle without even knowing what the stock is, because if the stock's going to move, this is a really easy play. Now, no arbitrage applies here. All the players in the market know what the historical volatility is. A lot of smart people like you or me, maybe just me, are thinking about what the volatility will be in the future based on news and events and things like that. So, we're trying to figure this all out. So mostly, none of these are going to be like automatically cheap or automatically expensive. Now, it might jump out to you that there's an opportunity, and then you should take it. But it's not like there's a free lunch anywhere in the market, in options and anything else. So keep that in mind. Yeah, I'm going to probably put these books in Godel under books, enter. So there'll be like a little library function. I'm just teasing about that. A lot of smart people here. All right, we are reading a book called A Course in Derivative. Let's see what it's called. A Course in Derivative Securities. It's a Springer finance book. Carry back. I just have allergies. I don't know that I would have shorted the Central African Republic token, even if I could have. It's Joe Springer, yes. Springer Nature. Yeah, all the quantum stocks are up. I can't make them go down, or I would. Okay. Some puts and calls are traded on exchanges. The exchange clearinghouse steps between the buyer and seller and becomes the counterparty for both the buyer and seller. So there's no risk the seller might default when the buyer chooses to exercise his option. If the owner of the option chooses to exercise, the clearinghouse will randomly choose someone who is short to fulfill the obligation. Isn't that great? You might get randomly chosen. Probably not, though. Oops. All right, most exchange-traded options are never exercised because any gain on a long contract can be captured just by selling the contract at the market price, canceling the position. So that's why you don't get randomly assigned when you trade options. However, the right to exercise is essential because it determines the market price. Puts and calls are also transacted over the counter. Very important concept on Wall Street, OTC, which means that they are private contracts of the counterparties. Moreover, puts and calls are also embedded in many other financial instruments. A prosaic but important example is that homeowners have the right to pay off their mortgages early. That means they have call options on their mortgages, with the exercise price equal to the remaining mortgage principal. Similarly, callable bonds can be redeemed early by the company issuing them. Convertible bonds have embedded call options on the company's stock, which are exercised by converting the bonds, and many, many other examples. Puts and calls also exist outside of financial markets. For example, a company may begin manufacturing a new product at a small scale. If the product is successful, the scale can be expanded. In this case, the company buys a call option on large-scale production, where the premium is the cost of launching small-scale production. Adapting the methods developed for financial options to value such real options is an important growing field, and I want you to think about that. There are many times where you might say, well, I have a call option. One very untoward and uncouth example is some people used to say that if you ever dated a partner that was overweight, that you might have a call option on them losing weight, because if they lost weight, they'll be more beautiful, and you're getting a cheaper transaction cost. A little inappropriate, but that's the one way to look at the real world of calls and puts. Exercising policies for calls and puts is also important. It may be rational to exercise a call if the asset value exceeds the exercise price, thus denoting the price of the asset by S and the exercise price by K. The owner of a call option can profit by S minus K dollars by exercising the option when S is more than K. If S is less than K, exercise would be irrational. You would never do that. Thus, the payoff to the owner of the call option is max 0 S minus K, so the max of those two things. It has been said that timing is everything, and the timing here should be made clearer. The simplest type of option is called a European option. A European option has a finite lifetime and can only be exercised at its maturity date. For a European call option, the exercise strategy just described is the optimal one, with S representing the asset price at the maturity date of the option. Equally, if not more important, are American options, which can be exercised at any time before maturity. I like that, Jam. For an American call option, the exercise strategy just described is the optimal one at the maturity date, but it may also be optimal to exercise prior to. Let K denote the exercise price, T the date the option matures, and S of T the price of the underlying asset at date T less than capital T. The intrinsic value of the call option at date T is defined to be the max of 0 and S of T minus K. One would, of course, never exercise unless the intrinsic value is positive. In other words, unless the option is in the money. Moreover, if the asset does not pay a dividend or other type of cash flow prior to the option maturity, then one should not exercise in any circumstances prior to the maturity. This is captured in the saying, calls are better alive than dead. Got it? Exercise being suboptimal is equivalent to the value of the option exceeding the intrinsic value. Very interesting point there. The principle that calls on non-dividend paying assets are better alive than dead follows from two facts. It is generally a good thing in financial markets and in life to keep one's options open. And early exercise implies early payment of the exercise price and hence foregone interest. The usual protest that is heard when the statement is made is that one should surely exercise if he expects the stock price to plummet. because by exercising and then selling the stock acquired, one can lock in the current price rather than waiting for it to fall, in which case the option will surely be worth less. This is very intuitive, but ignores the fact that you could short sell the stock if you expect it to plummet. You don't need to exercise the stock to lock in the current stock price. In fact, shorting the stock and retaining the option is always better than exercising, assuming the underlying asset doesn't pay a dividend. Specifically, suppose an investor considers exercising at date T. As an alternative to exercising early, consider shorting the stock at date T and retaining the option. This is always better than exercising at date T because the short position can be covered at cost K at date capital T by exercising the option, and paying K at date T is better than paying it at date lowercase t, given that interest rates must be non-negative. That's an assumption. So the position can be covered because the stock can be purchased and returned to the lender to cancel out the short position because of the call. To be more precise, note that the exercise at date lowercase t produces S of t minus k dollars at date t. On the other hand, retaining the option, shorting the stock at date t, and covering the short either by exercising the option or buying in the stock market, whatever is cheaper, produces S of t dollars at date t. And the maximum of 0 and S of t minus k minus S of t is equal to the maximum of negative S of t negative k, which is equal to the minimum, or the negative minimum, the negative of the minimum of S of t and k, which is greater to or equal than negative k dollars at date t. Hopefully you followed that. You might want to read the book and go through that once or twice, but it's very intuitive. If S of t is larger than k, one has negative k dollars at date t, in which case retaining the option has been superior due to the time value of money. Furthermore, if S of t is less than k, the strategy of retaining the option and shorting the stock produces negative S of t greater than negative k dollars at date t, so retaining the option is superior both due to the flexibility, which is waiting until t to decide whether to exercise, turns out better than committing at date t before then, and because of the time value of money. We'll go into more detail in a second. Yeah, European options are very different. I mean, they're not that different. What is that? The uptick rule? Yeah, for Rigetti, the uptick rule is in effect. It will be restricted until basically till tomorrow. Y'all buying hood calls? A lot of people are expecting a good quarter there. Be careful. Everyone's expecting a good quarter. How are you going to profit? Yeah, so collar is pretty simple idea. A lot of executives do the collar. So when you have a stock, typically your payout looks like this. This is break even, right? This axis is stock price. P&L goes up and down, right? So this is, say, up $1 million, and this is down $1 million. Okay, and this is the stock price. So let's say this is IonQ, and the stock's at, say, 39. Well, right now you're breaking even, but every dollar it goes up, you make money, and every dollar it goes down, you lose money. Makes sense. Now let's say you want to sell a call. Well, you basically say, I don't want this upside. So even if the stock goes up, I'm not going to get this upside. It's kind of been sold off. I've sold the call. Now I do get, of course, a premium for that. But let's say I sell the premium to buy a put. Well, I get the same thing here. I get limited downside. So I get this new P&L curve, which I've bolded a little bit here. And the old P&L curve is in dotted lines. And many corporate executives, including yours truly, have used collars to basically say, look, I'm locking in, you know, I make a little bit of money. I make the same amount of money really until 45, but after 45, I don't make any more money. And below 39, I lose money until say 35, whatever the symmetrical number is, but I don't lose any more money. I'm locked in at 35 no matter what happens. So this is called a collar, and Wall Street sells collars quite often. Depending on how the collar works, you could, you know, if you buy a collar, you can reduce your margin requirement, things like that. I'm a big fan of web development. I'm only one person, guys. I'm only one person. Can only do so much. I do want to look at Gilead and Zilio. I haven't read all of Damodaran's works, but he's, you know, I recommend studying him. I didn't say it was a bear on China. Who said that? Don't put words in my mouth. I like those Chinese stocks. Yeah, I mean, specific Chinese stocks are a bit different from the whole country and stuff like that. I mean, they obviously have some businesses that are worth something. Yeah, IPF's a rare disease, definitely. Millen, you got to do your own homework on where to trade and where to open up accounts and who to deal with. You know, I'm not going to hold your hand. You do your own research. Just go ask around. Not your personal servant. I don't know what'll happen with Reddit or Robinhood or any other earnings. I don't traffic in insider information anymore. I mean, I don't traffic in insider information. Never did. Bobby, you want to get banned? You trying to get banned, Bobby? I don't think the up to rule makes a difference, really. Tee-hee. Tee-hee. You're done. You're done. We don't tee-hee over here. My friend Serini is not my friend. That guy's a bozo. That's why the stock is such a dog. Tell me about it, Steven. He wasn't a good employee for me. Don't know Aguan, never heard of it. I don't really trade bonds. You need a broker, I'll tell you that. Yeah, Ola, we're thinking about it / working on it. These things take time. I wouldn't trade 0 DTEs. It's basically gambling. Yeah, I mean, S&P looks fairly valued, but I didn't do too much work into it. I'd say at least 50 to 100 million for AUM. You start a fund with 5 million, it's pretty hard to make any broker really care about that. I kind of levered up the theta on my position more than covered. I wish I covered.
Order filled.
Humphrey. I don't know Portnoy. Don't even ask about bald bean counter. It's something we talk about with our investors, Patrick. Good luck, Haywood. $5,000. It's gonna be pretty expensive though, Humphrey. I know this. I know this. Well, I fly all kinds of ways. 7,000. Woof. I'd swim for that price. Look at BBAI. Wow. People want these trash stocks, man. Give me the biggest trash you can find. That's like Farcoin. Yeah, around there, Neo. Around there. Yeah, I've looked at Broadcom.
I like that ticker. Bye bye.
Take economy. It's how long is the flight? Oh, I don't know where you live. See, for me, from New York, I mean, it's whatever. Ion double Q. Most people in jail, smoking weed is the biggest hobby, I'd say. Sports, gambling, generic thugging. But guys like different things. Some guys like cooking. Some guys like film. Yeah, I know ANAB. There's some bulls and some bears. What's the mechanism, Sardine? Whoa, organ meat. I think you gotta go. No video games, no. In some European jails, they let you play video games. But just like a PlayStation, no internet. Right? In Sweden, they roll out the red carpet. Oh, PD-1 agonist. Huh. Interesting. Yeah, I think Denmark, Netherlands. I think in some of those European prisons, you also got a TV in your cell, which is pretty lit. Maybe in state prison too. Yes, there were popular TV shows. Wildin' Out, Love and Hip Hop. Yellowstone was very popular.
Thanks for the suggestion. I don't know. Don't know why Nordic countries. I mean, somebody told me that when you go to Sweden, it's like all supermodels. Every woman's super tall and beautiful, blonde, blue eyes, gorgeous. What an Aryan soul. I'm a chud. Okay, I think this is maybe a better book to read. I'm a chud. Man incel. What am I doing here? George and I are friends. That's the homie. The hell am I doing here? I don't belong here. Yeah, I saw there were all these red flags for ANAB.
Yeah. Sure. Yeah, we can use parallel processing. It's interesting that you find there's an issue there. Use that for pricing, to trade. What do we use bondage for? Looks like some trading. Yeah, that's the joke, Joseph. I don't think markets are truly efficient, somewhat efficient. No, it's 2,500 no matter what. Large cap stocks are pretty efficient. Not every stock's efficient, obviously. Oh, that's how much productivity matters to people. I mean, if you oh, there's a theory out there that nobody does actually make money consistently. It's well within the error bounds of probability. That the Buffetts have just been serially lucky, and there's going to be somebody that's extremely serially lucky. Now, I don't really believe that, but no, I of course I don't believe that, but well, markets are pricing all known information. The information that came out today was not known, so it priced it immediately. Efficient markets doesn't mean the market never moves, because there's always news. Remember, Citadel almost went out of business. They're down like 40-50%. Yeah, we got something figured out there, Slum Duke. Don't fret. Yeah, there's some trades that are highly profitable that are, you'd consider arbitrages. And if you look into academic finance, there's strong form, there's semi-strong form, and weak form efficient, and much ink has been spilled on this topic. You can go read all the literature, opinions of different traders. No shit, Doug. That's really interesting. Do you mind emailing me? If you could email me, I'd really appreciate it. I want to talk more about this. We could really help there.
Who's hitting the lick? Who hitting licks? Schrodinger's cat. Sorry guys, I'm doing like kind of some other work here.
Waterfield.
Any good web developers out there? Gomels moles. Let's ban this guy. I got allergies with my cat, you weirdo. Weirdo, man. Project on me. Well, we're still building it, Gottfried. So, we don't have the same breadth of data. Our price is lower, but our price will rise. Yeah, Don, I do want to do that. We have a little bottleneck with developers. We
Yeah, we pay our developers a lot. No marketing team. Odell's our main focus. You got tons of equity. We're not more elite. We're not elite code shop. We never really thought that made sense. We want to look at how people think. Yeah, Bloomberg's toast. People hate Bloomberg. Now we've replicated most of what people actually use on Bloomberg. I've been a customer since I was 17. For equities, there's just not that much to do. Think we can do something like that, Albert? Sure. Same price, basically. I worked at a hedge fund when I was 17.
directives system sort of sucks. It's kind of awful. There's no earnings estimates or anything useful. So cringe. What? Financials? The fuck? Yeah, Koifin, I think it's not going to make it in the long run either. Yeah, look, no platform's got it all. That's for sure. TradingView has some nice features. But there's not that many platforms. I mean, there really just aren't. A lot of these platforms, for example, don't have bonds at all or foreign stocks at all or whatever. I don't know that the number of languages matters as much as it is about the as you understanding computer science. It's important to understand languages. No doubt about that. You gotta do your work. But, you know, you also have to understand. Oh, wow. This all works. It's impressive. Seems unlikely, though, to work. We get data from exchanges. So we have deals with all the major exchanges. It's more important for me to have a little bit less stress than it is to overnight trading we can do for sure. Those are just not that popular. I know some people really do like to look at it, so we'll do it at some point, but we have bigger fish to fry like London and Hong Kong. And official software architect, we have a CTO.
Yeah, no, we can definitely do open interest. I mean, I don't really care about the school. If the person's really bright, that's what I care about. There's slight tendency for really, really bright people to go to top schools, but it's not r squared equals 1. It's like r squared equals 0.1. Um, Stress is stress. I mean, you got to find a way to deal with it, and that starts earlier in your life. It doesn't. It's not just relevant to the markets. I wish I was better at it because stress leads to bad decisions too. I'm not sure, African boy. I probably should think about that harder. Cutting it back down to size. Let's go.
Not every single day, Humphrey. I mean, I try, but no, not every single day. Yeah, I got drafted out of high school. IonQ looks like it's ready for a fall. See if I can short some.
Order filled.
I don't think we're actually using WASM. I think we're using web workers. But FatCat can tell you more about that. I'd like to use WASM. I think web workers may compile down to WASM. But I would love to do the whole thing entirely in WASM. Like Figma. Or entirely in C.
We got way too many branches here. Real bad man. A real bad man. Go branch for branch, pound for pound. You want to go branch for branch, bro? You want to go branch for branch?
So I think Koichi, probably one of the biggest things I'm looking for is people who are really interested in the markets. If you're not really interested in the markets, it's kind of hard for you to really care about market software. You know, and most of the companies that we compete with, most of these people are, you know, they're not actually that, they're mailing it in. They're not that excited about the markets. So I like people that are, you know, they really want to you know, make software for themselves and for others that, you know, is something that they care about. You know, so often software developers have to do something. I had a friend who's a really great software developer, and he works for a wedding company. Yeah, we stand on business. You know, but you can't blame the guy if, you know, he wants a work-life balance. I think it's called The Knot. TheKnot.com. You know, it's a great site. You know, he probably made a bunch of this stuff. And, you know, it's a job. But, you know, how do you get that excited about making a wedding website? You know, that's not going to... Well, that's good, Dusty. I mean, that's important. You know, are you going to be that passionate about it? Are you going to work an extra couple hours? I'm not saying it's a bad company or anything. I'm just saying, who's passionate about that? No straight man I know gets excited about wedding planning. Okay? But what are you going to do? It's a high-paying job. You know. You guys got a family? Oh, no. I'm with you, Alex. I was about to say, I'm not sure any gay guys care that much. Yeah, and some people are. Yeah, I think Paranormal's right. Like, there are people who are just like positive disposition, and they're just like, yeah, give me a problem to work on. But I think passion's pretty important. I want people who trade the markets, who like stocks a lot, and it also helps us avoid errors because let's say you're a developer and you don't even know what a bid ask is. You know that exists. What are you going to do? I mean, how are you going to help me? You might create some crazy bug that's going to kill my program. Yeah, that's pretty gay, Joey. That's a woman's job. Oh, if it isn't Icy Plays. Icy fucking Plays. At all times. Same. Same. I like basketball. I like football. Back to reality. Up, there goes gravity. On a sweater already. Mom's rigetti. Oh, I can't bring cats in the office. I wanted to. Our office manager said, no way, Jose. Lakers commit it all, man. The IonQ is 200 times revenue, and that revenue is probably going to go down.
Spintronics. I would say most of them die God. Yeah, that's just how it works, Dusty. I actually want to talk to the office manager about something. I'll be RB. Don't go anywhere. Short and a little more rigetti. Looks like this bounce is going to be very short-lived. Instead of Ion Q, you know what Kanye would call it? Ion. Should I say it?
Waterfield.
Oh, I'll buy this stump. I'll buy this dump, no problem. Not all the wallets have the passwords. And I could brute force those passwords too. Give me that. Yeah, somebody. Me. You just use the old Albanian way. We bribe them. let me hang out at night in the landfill. Me and my team. All right, we'll give you a couple $1,000 underneath the table. Yeah, it's corroded, but I use electron microscope. I don't give a fuck. Use nuclear magnetic resonance. I'd probably say math, maybe computer science. If only those IBM machines worked. Yeah, the government only has so much interest in quantum computing, and they certainly only have so much interest from one vendor. And a lot of those contracts won't get renewed because there's no actual use. I'm in an office, our office in New York. Anybody finna smoke? Trying to smoke? Trying to smoke. Smoke weed in the office, I don't care. Yeah, that's nice. Why you asking? Devs do something. Listen, if my people want weed, I'll give them weed.
I do know a firm that where they smoke weed in the office. We don't do that here yet. And no, I don't think I'd be down for that.
Smoke weed every day. Hey, hey. Smoke weed every day. Some people you need to smoke weed to calm your nerves. You know what I mean? That's what I do. That's what I do, shit. Now I be having the best ideas on weed when I smoke. I smoke that gas.
No, the most fraudulent is QUBT and LAES. D-Wave is up there. D-Wave doesn't really do anything. Loud back. You know what sour diesel is? Yo, bro, imagine like software that's like not soft. Bro. You know about East Coast sour diesel. We have weed prices on go down, up and down, like it's Wall Street. No, I never smoked weed once in my life, believe it or not. Lay's only reports half years, so they get away with only having to report crappy financials twice a year. I'm the next Rick Ross. Thousands of chickens. Quack, 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 quack. These idiots in my office, they have the Zyn tower they built of Zyn cans. And they're like trying to stack it to the ceiling. These fucking guys, man. What the fuck are they doing? This is what a full stack developer is? They're stacking up the Zyns to the ceiling. I'll show you guys a picture later. It's fucking true chuds, someone says. The Zyns have fallen. Billions must stack. The synagogue, they're calling it. EA is already pissed. Synagogue? What the fuck is that? Synagogue? I don't know. I don't participate in this chicanery, tomfoolery. You guys know Osama bin Laden? Ah! Tucker Carlson. What flavor do you guys do? All of them. All of them, apparently. Sick. Sick chuds. I'm a chud.